Welcome to this explainer. Right now, thousands of miles away in the Persian Gulf, a fleet of U.S. warships has effectively drawn a line in the water. Today, we're unpacking the actual mechanics of this immense naval blockade of Iran, and we'll map exactly how this distant conflict is impacting your daily life as of May 2026. We're going to dive deep into the raw data, the tight timelines, and the massive global shifts to really understand the ripple effects of this historic event.
So let's just dive right into the urgent question I know you've probably asked yourself while running errands. Maybe you were staring in absolute disbelief at the numbers ticking up on the pump this week, wondering, why on earth is gas suddenly spiking? It's the most immediate, tangible sign that something massive is shifting in the global economy. But to actually answer it, we have to look far beyond our own borders.
We're starting right at the pump. The painful reality of gas blowing past $4 a gallon here in the U.S. For so many of us, filling up a minivan or a work truck has suddenly become a really heavy burden on the monthly budget. But you know, the number on the local gas station sign is just the very tip of the iceberg. To truly understand the incredibly powerful forces driving this surge, we need to zoom out from your neighborhood all the way across the globe to the Persian Gulf.
Part 1. The 2026 Oil Pivot.
Listen, this is not just some temporary blip. We're talking about a massive structural earthquake and how the world gets its energy. Because the primary Middle East route is so heavily restricted right now, the entire globe is suddenly engaged in this frantic scramble. They're rushing to forge entirely new supply chains practically overnight. Nations and massive corporations are desperately trying to figure out how to buy and move the literal lifeblood of the modern economy without relying on the pathways they've comfortably used for decades. Looking at the timeline, you can see exactly how this blew up from localized tension into a massive global bottleneck. Back in early 2026, fierce regional fighting pushed Iran to close the Strait of Hormuz, essentially putting a total chokehold on global transit. In direct response to that, by April, the U.S. officially declared a heavily enforced naval blockade of Iranian ports. And now, as of May 2026, we're sitting in a really fragile window. We're experiencing temporary pauses in the fighting, basically holding our collective breath, while incredibly complex ceasefire talks attempt to untangle the mess.
All right, moving on to Section 2, Anatomy of the Blockade.
To really grasp the strategy here, you've got to understand the incredibly delicate balancing act the military is trying to pull off. This operation is intensely multi-layered. The U.S. Navy isn't just trying to block ports to stop Iranian oil revenue. They're simultaneously trying to maintain regional security by ensuring only cleared ships pass through. At the exact same time, they're using this as leverage to force critical nuclear negotiations, all while trying to stabilize global energy markets by helping allied nations transition to non-Iranian oil sources. It's a razor-thin tightrope walk between applying maximum pressure and avoiding a total global economic collapse.
So how do they actually execute an operation this huge? Well, think of Operation Project Freedom almost like the ultimate high-stakes maritime traffic stop, following a strict four-step protocol. Step 1 relies on heavy aircraft and satellite surveillance, constantly watching the waters from above. Step 2 involves tense radio calls from warships, intercepting and ordering massive commercial vessels to turn around immediately. Step 3 brings in the physical enforcement, escalating to actually disabling ship engines or seizing vessels that refuse to comply. And finally, Step 4 is a massive logistical hurdle, providing armed escort services to protect non-Iranian tankers so that at least some global oil can still flow safely to the rest of the world.
Section 3, the Global Domino Effect.
The diplomatic fallout here is a totally tangled web of immediate reactions. You've got the United States rigidly holding the line with its Navy. In response, Iran is threatening the permanent closure of a waterway that normally handles a staggering 20% of the entire world's oil supply. This standoff leaves massive buyers, primarily China and India, staring right down the barrel of severe energy shortages. Meanwhile, we've got OPEC+, that powerful alliance of major oil-producing nations led by Saudi Arabia and the UAE. They are scrambling right now, pumping more oil as fast as their infrastructure allows to try and fill the massive void left in the global market.
Because millions of barrels of oil are suddenly trapped behind this blockade, global supply takes a nosedive. And that triggers an undeniable, brutal chain reaction stretching from the Persian Gulf straight to your local supermarket. Blocked exports lead directly to severe price spikes, pushing crude oil well past $100 a barrel. But it doesn't stop at energy. Those fuel costs dramatically inflate global shipping costs. Think about the huge expense of moving a cargo container across the ocean or flying transport jets. Those operating costs trickle all the way down to the price of a loaf of bread or a carton of eggs. Ultimately, this intense pressure is forcing Europe and Asia to aggressively pivot, pouring billions into rushing the construction of new pipelines and green energy infrastructure just to survive.
Honestly, the sheer difficulty and expense of this pivot is mind-boggling. Global oil companies are practically abandoning supply routes they've relied on for decades. Relying on volatile Middle Eastern paths is rapidly becoming a thing of the past. Instead, the entire global focus has shifted to the massive logistical undertaking of securing and building long-term infrastructure deals with more stable producers in Canada, Brazil, and the US. It is literally redrawing the global energy map in real time.
Which brings us to Section 4, your wallet and markets.
The real catalyst for your everyday financial pain? It's crude oil, shattering the $100 a barrel ceiling. In the energy world, this isn't just some number on a trading floor. It's a psychological and economic breaking point. It's the core metric that dictates the base cost of literally everything you touch, eat, or buy.
And look, this is about way more than just groaning at the gas pump when you fill up your car. Disrupted shipping lanes mean the basic cost of doing business has skyrocketed all over the world. It is the exact reason that the online order you placed last week is inexplicably delayed, and why you're suddenly seeing much thinner shelves and drastically higher price tags for everyday necessities. Every single mile a product travels has suddenly become significantly more expensive, and unfortunately, corporations always pass those increased operating costs directly down to us, the consumers.
Wall Street is absolutely reacting to this new reality, and it's cleanly dividing the stock market into distinct winners and losers. Investors are pouring money into the defense and energy sectors, driving massive growth for companies involved in military contracts and domestic oil production. Conversely, we are seeing immediate, brutal financial struggles hitting the airlines and retail sectors. To understand why, you just have to look at their business models. Airlines and massive retail chains operate on razor-thin profit margins that rely entirely on the assumption of cheap jet fuel and highly reliable, affordable global shipping networks. When those two things disappear, their profits evaporate overnight.
Finally, Section 5, Escalation Risks and Uncertainties. Even with all this cutting-edge tech, the blockade isn't flawless. It's facing intense, daily risks from what the industry calls shadow fleets. These are unmarked vessels that deliberately turn off their tracking transponders to try and sneak past warships in the dead of night, aggressively undermining the whole operation. Plus, there is a constant, looming threat of violent retaliation against other commercial ships or vulnerable oil facilities in the region. Combine this volatile mix with growing diplomatic friction from energy-starved allies like Japan and South Korea who desperately need the oil the U.S. is restricting, and you have a literal powder keg just waiting for a spark. As all of this plays out, the ultimate critical threshold that has economists absolutely terrified is $120 a barrel. If crude oil hits and sustains that level, it wouldn't just mean expensive gas. It could easily trigger a severe global recession. We'd be looking at widespread factory shutdowns, massive corporate layoffs, and potentially even rolling blackouts in vulnerable nations that simply cannot afford to keep the lights on.
So, I'm going to leave you with this final, absolutely crucial question to consider as you watch these historic events unfold on the news. Just how fragile is our modern economy when the fuel that runs it gets cut off? How long can the global economy actually handle $120 oil before it breaks entirely? Keep that question in mind the next time you see those numbers ticking up at the gas pump. Thank you for joining me for this explainer, and keep learning.